If you're looking to create, grow, and sustain your wealth, download and subscribe to the Pain Points of Wealth podcast at BeBullish.com with Bob, Ryan, and Chris Payne. It's your podcast for market insights, money tips, and real talk on the economy. Download and subscribe at BeBullish.com.
Good morning. This is Mike Stoller for the Stoller Real Estate Report. What's happening in the rental and the condominium market in New York City? It seems to be doing well, and I have an individual who's very active in the market today. His name is Jeff Znaty, who is the managing partner at King's Capital, LLC. Thanks for being here.
Thanks for having me, Mike.
So, in a short comment, what's happening in the market with regard to condos, since you seem to be rather active in that market?
Yeah, recently we've shifted from more rentals to condos. It's been a active market lately. I could tell you that some markets, such as downtown Manhattan and north areas of Brooklyn, have been, I want to say, hot or have been very active. I'm seeing recently that there's more cash buyers, and people want quality, whether it's quality neighborhood, quality product. So I've been seeing a lot more activity on the condo side, and that's where our focus has been lately.
In the purchasing of properties and converting them to condos?
Converting or ground up.
Okay, so for example, I know you're doing some things in downtown Brooklyn. Why don't you tell me about that?
So recently we acquired a vacant brownstone in Brooklyn Heights, 138 Joralemon. The building was an 11-unit building, vacant, and besides dealing with the best and highest use, there's also some challenges today in paperwork and dealing with legalities to renting out units. So we ended up going the condo route, where we're converting the building from 11 units on a 5-story building to 3 primary residences.
Oh, so it's going to be 3 out of 11.
Out of 11, and it's a 5-story building. There's going to be 1 duplex, the garden with the 2nd floor. The 3rd floor is going to be a simplex, and then to use the rooftop, we're going to have the 4th and 5th floor as its own apartment.
It's a walk-up or an elevator?
It's a walk-up, but, there's no product in some of these neighborhoods, Brooklyn Heights, Soho, Greenpoint. And if you deliver a good product and you have that home type of feeling, it's a different type of buyer than the normal tower or glass type of amenitized building.
Now, what amenities are you providing? I mean, you don't have much space to provide that much amenities.
It's less about amenities, more about finishes, the layouts, and also maximizing space. So we're going to be utilizing the roof, try to create some sort of wellness feel, maybe with a cold plunge or something that's more suited for, family that want to have outdoor space, along with the garden space where you try to maximize the look and feel of that home type of buyer.
Now, what are you doing in Park Slope?
So Park Slope is interesting. We're actually doing a project now in South Park Slope. And what we found recently is there's a lot of owners that have property that need help maximizing the property, whether it's through development or repositioning. And we're doing a joint venture on 2 different properties. One is on 23rd and 5th, and one is on 20th and 5th. So not exactly prime Park Slope, Mike, but as they call Greenwood Heights or South Slope.
Right.
And we're doing a ground-up development. One's a 25-footer, 4 units, and one's a 50-footer, which is 10 units. And we're just trying to capture the needs and demand of the market for that neighborhood.
So what do you think these units will be selling for?
I think we underwrote about $11.50 a foot. But, one thing that we don't do with our underwriting is there's a lot of trend in terms of where the market's going, a year or 2 years out as the project is finished. And I think we're going to see a little bit higher than $1,200 a foot, but only time will tell.
What effect has tariffs had on your business?
Tariffs have had some effect on the business. I'll tell you the biggest challenge when it comes to development is really the finishes. It's not necessarily the labor. It's not necessarily the land cost. If you want to do very nice products, such as certain stone or certain type of tiles, importing from Italy, it can get pretty expensive.
What about labor costs today?
Luckily I don't deal with anything that involves prevailing wages or more than 99 units.
Right, but you don't have 99 units, right?
No. So right now we're okay, but I can tell you that, labor is still pretty steady. Luckily we've been okay with that part.
Let's talk about the Hell's Kitchen project that you were working on.
We just finished 2 projects there. One was on 48th and 9th. It was an old dormitory from the Bank of China, and The Bank of China owned this 38,000 square foot building on 48th and 9th. About a year ago, we actually completed another building across the street, 356 West 48th, and the building was a complete gut. We gutted the building down to the studs. There were some structural issues, and we turned it into 39 new primary residences.
At what rent?
It may shock you a little bit. We're getting about $4,700 for 2 bedrooms. They're about sub 600 square feet.
That building is elevated.
Elevator, yeah.
Right.
Elevator, rooftop. There's a courtyard for some of the residences, gym, and storage.
How are you doing on getting financing for some of these projects today?
You know, a year ago was quite challenging, and what I mean challenging is it was very costly. And I think right now there's a lot of these debt shops that have popped up over the past 3 years as people were shifting from equity to debt. There's been more competition, which has been good for us as operators. But I could tell you that it's still not there yet, but we're seeing a good demand in financing. And the number one thing for us is just keeping a good relationship with our existing lenders so we can start to the next project as we finish the first.
Are you doing something down in the Soho area? Or
We are. And this was also another interesting project. The debt broker gave us a call and relayed a property that one of his clients had in contract or was signing a contract. New York is a very small place, Mike, and a lot of the good players end up seeing each other often throughout the years. And I knew the person. He had an angle on how he was going to convert the building from office to condos. The property is 392 West Broadway on Broadway and Spring, West Broadway and Spring. And we're converting it now to 4 primary residences, about 3,500 square foot units, targeting about $2,500 a foot per unit, where the penthouse is going to be a duplex, hopefully targeting $3,000.
Great, that would be wonderful. With regard to boroughs, you've done a lot of Brooklyn and Manhattan. How about Queens?
We haven't anything that clicked yet in Queens. You know, we like areas of Long Island City and Astoria, but prime areas of Brooklyn have really been our forte. We come from Brooklyn. We started out in Brooklyn. Brooklyn has exploded in the past handful of years. I think certain areas in Brooklyn actually went up in COVID, then going down. So we've been more active in Manhattan, but Queens is cool.
So Queens is pretty good. Have you thought about the Bronx?
We have thought about the Bronx, but I think we've thought about it more in a low-income type of affordable housing play. It's been a little bit challenging working with the city with their regulations and how they go through their process. Hopefully that eases up with the new administration, and if it does, we'd love to jump into the affordable housing.
What about Article 11s?
Article 11 hasn't been too much of a problem for us. We're able to navigate usually through management and through the asset management, so it's been a little bit of a challenge years ago, but I think we've been really good in terms of the size of our buildings and, you know, the requirements they have for us.
Where are buyers coming from? I mean, investors for you.
You know, international is still a big play. I can tell you that there are some international buyers coming either to park money in condos. I spoke to a Chinese developer recently in Queens, and they're pumping out a lot of EB5 money. But for us, it's been really local buyers, finance, tech, people that really want to have a home. So we've been seeing a lot more people affluent these days, making more money, and they just want to have an upgrade to their life and their living.
So how do you look at 2026?
2026 is going to be extremely busy. We are just starting out, and it's January as we're recording this. We haven't even finished the first quarter, and I can say that as rates do come down, I think volume is going to pick up. We've been talking to a few brokers recently where we're in a good place as a seller, but I think as rates come down a little bit more, you'll see the volume pick up, which will eventually relate into cap rates.
So where do you see cap rates?
So we just sold a
Especially
building.
in the multifamily, since that's the area of expertise.
We just sold a building with Avis and Young, and we did a project on 29th and Park. And it'll shock you, and I shocked myself, we actually sold it over a 6 cap. And, at the time, rates were somewhere in that 6.5% range. I think the 5-year Treasury was close to 4%. Right now is about 3.8, but it's still close to 6%. I mean, I think if we have another rate cut, we may see this get closer to the mid-5s, but I think volume needs to pick up before we start getting that low.
You have an expertise in retail. How do you see retail?
So I just read an article yesterday that there's more openings this year on pace for retail than the past 5 years. So I think retail is exploding in a few different ways. Obviously on the F&B side, it's huge demand. New York City lives on restaurants and hospitality in that end. And we're also seeing a lot more experiential type of retail. So some of these retailers are creating cafes or creating ancillary parts of their retail stores to create an experience in their retail. So I think retail is hot, but I also think they're very selective now. They want foot traffic. They want some sort of hook to that block. And there has to be something about it, whether it's a neighborhood, whether it's co-tenancy. It's a very much specific need for retailers.
Specific. You have retail tenants. What are you looking for in a retail tenant?
Experience, liquidity, and not just being fast-paced guys to sign and take on the next space. They want to be able to really maximize their profit because, end of the day, you're a partner with these retailers. And if they're not successful, you're not successful. And dealing with releasing or legal costs can be costly and timely. So you got to pick your tenant correct. We actually just signed a lease today on West 8th and McDougal. It's a bookstore tenant that is going to be playing off the NYU type of clientele. And it's really about how their financials are, how they operate their business, and what are their goals in terms of profitability.
Hey, I'd like to thank you for being here. I hope that you'll be back on my show later in this season, and I'm certain that you're going to be doing well.
Thank you,
again.
Mike. Thanks for having me.
Every week, the Payne family cuts straight to the real financial story.
The one question, Bob, everyone's asking is, are we in an artificial intelligence bubble? You've been through boom and bust. What do you think?
No hype, no myths. Just what actually matters to your money.
Does feel very similar to what we experienced in the 90s. Where are we, though? Are we in 1995, 1997, 1999?
Listen to the Pain Points of Wealth on the Red Apple Podcast Network.
It's tax season, and at LifeLock, we know you're tired of numbers. But here's a big one you need to hear. Billions. That's the amount of money in refunds the IRS has flagged for possible identity fraud. Now here's another big number. 100 million. That's how many data points LifeLock monitors every second. If your identity is stolen, we'll fix it guaranteed. One last big number. Save up to 40% your first year. Visit LifeLock.com/podcast for the threats you can't control. Terms apply.